Good morning, and thanks for joining us for Tecnoglass Q4 call. We're going to take you through the highlights for the quarter and the year. Starting with the highlights, we had a strong year, growing almost 7% top line, with single-family residential contributing 11% and commercial construction contributing mid-single digits. So both segments contributed to our growth, all organic last year. Record operating cash flow and free cash flow at 170 million and 91 million respectively, despite investing almost 80 million in capex for growth initiatives, where we have an operational capacity north of 1.3 billion to grow into the few next years to come. From a balance sheet perspective, an all-time low leverage. We're ending the year at a net cash position with cash of 135 million and debt of 110 million, so very well positioned to execute on our strategy going forward and return cash to shareholders. We repaid 65 million in debt and returned 20 million in dividends throughout the year. From a backlog perspective, we're going to touch on that up next at an all-time high of 1.1 billion. Moving on to that slide, as a perfect segue, due to favorable demographic trends, our backlog continued to go up. Our main markets continue to experience better than US broad trends, and we were able to grow our backlog 28% year over year, which equates to 2.1 times LTM our commercial revenues. So essentially, we're shaped up to have a lot of visibility in 2025 and now growing into 2026. The backlog composition continues to be roughly two-thirds multifamily and other resi-related construction. And what is doing better than most is the high-end condos that are not as sensitive to interest rates as some other asset types like rentals. From a backlog evolution perspective, on the next slide, as I was mentioning, we now have visibility well into 2026 with longer dated projects. As you can imagine, these high-end condo projects are high tower that are multi-year execution. So that actually gives us visibility not only this year, but 26 and beyond. And it's also worth mentioning that as in previous ways of reporting our backlog, what is only accounted for as far as single-family residential within that backlog is what is already in production. So essentially, beyond the backlog that we have in hand, we also have future revenues coming from single-family residential, which are not yet reflecting into the backlog. Moving into single-family residential, we continue to expand. We did a record year of 372 million, up 11% year over year. And that business now accounts for roughly 44% of total US revenues, up from just 3% when we started this business in 2017. We continued our geographical expansion. We now have 4 operational showrooms and are signing leases for showrooms in Arizona and California, where we're going to introduce our brand new light aluminum product, the Legacy line. So we're set up. We have our sales force ready to go. So we're accounting for different regions to start contributing to that growth on that single-family residential segment as we move forward into 2025. From a broader perspective, we wanted to highlight some secular trends that are playing into our strength. Essentially, if you look at this slide, what you see is that some of the states where we're the strongest, like Florida and some of the Sun Belt states, are actually outperforming the broader US and are expected to continue to outperform going forward based on construction starts. So that's why we have confidence that the backlog should continue growing and that we should be able to execute on the projected growth of 2025 that we're going to discuss here in a little bit. From a revenue trend perspective, as I was mentioning earlier, both segments contributed nicely. Q4 was actually a very strong quarter in comparison to Q4 of 2023, up 23%. And for the full year, as I was mentioning, almost 7% all organic top line growth. Both segments contributing to the growth, single family residential more so at double digits, commercial construction contributing mid-single digits range. From an EBITDA perspective, EBITDA quarter over quarter was up 28%. It was a strong quarter. Stable FX contributed to that, but actually what drove the incremental EBITDA, of course, with the incremental revenue, was more volume, and we were able to get more leverage, operating leverage on that incremental volume and incremental revenues. From a full year perspective, the EBITDA was impacted from the first and second quarter, which had headwinds related to FX and increases on SG&A related mainly to salary increases at the beginning of the year at a time where the revenues were just ramping up. Revenues were sequentially higher as we moved through 2024, so the second half of the year was much stronger than the first half of the year. Moving on to aluminum tariffs, we wanted to highlight some key thoughts as to everything that is going on with broad tariffs and in particular to our industry, aluminum tariffs. From a macro perspective, we wanted to kind of emphasize that, again, the U.S. is not yet self-sufficient in terms of the needs for aluminum, with roughly 50% of total needs being imported from many other different places. Colombia only accounting for about 2% of total imports, so not a material source of imports for the U.S. in terms of aluminum. The production in the U.S. has been declining as of late, and at the same time, some of the industries that consume the most aluminum have been growing, namely automotive, solar, construction. So that's creating an imbalance and a continued need for imports of aluminum. As a result of that, we have already seen some competitive dynamics in the sense that some of our competitors are already announcing price increases in response to the tariffs that are potentially coming. We're looking to work with our clients, obviously, to be able to find ways to mitigate the impact. And we'll see what happens when March 14th comes around and see where we are. But some of the other things that we're also exploring to do is sourcing US-based aluminum. Obviously, our expansion into vinyl would mitigate the effect. And again, working with our clients to find pricing solutions that are able to cover some of the downside risks that this could present. From a country-specific perspective, it's important also to know that Colombia is the U.S. main trade partner in the region. It accounts for about 30% of Colombia's exports. But even at that, through the bilateral agreement that has been in place for over 12, 15 years, Colombia has been at a deficit with the U.S. each one of those years. Moving forward to the outlook, we are shaping up to do about 940 to 1.02 billion in revenues, or about 10% growth at the midpoint of that. From an adjusted EBITDA perspective, we're looking to get to between 300 and 340 million, or about 16% growth at the midpoint of that. We laid out two different scenarios depending on some factors like the tariff impact, inflation impact, interest rates, and FX, and also some micro Tecnoglass related factors such as what happens with our legacy business on single-family residential, because we already have very good visibility, how we're able to ramp up the vinyl segment, and how the light commercial business behaves throughout the year. With that, I hope you join us for the next call, and have a good day. Thanks.